All right, Bull Bear. We've got Joe Battipaglia of Stifel Nicholas and CNBC contributor Jerry Bowyer. Hello, gentlemen. I want to just start, before we get into the nuts and bolts of buying and selling. Page 1, above the fold. I don't know, this thing could have been a 5,000-word article about Timothy Geithner, member and overseer of the Finance Club. Geithner forged close ties to Wall Street. And in particular, Joe B., I'm going to start with you. The worst bank, which was Citi, run by Sandy Weil before he stepped down. Weil actually offered Geithner the position of CEO of Citi. Geithner sat on the board of one of Sandy Weil's nonprofit philanthropies. How can Geithner be an independent regulator when you see an article like this 5,000 words long?
Well, he really can't. In fact, he tried to make the case that he's a lowly public servant, never worked in an investment bank. But in fact, he sat at the feet of all the major titans on Wall Street. And if you look at his record, what you find is that while he may have said things like derivatives are bad and we have to scrutinize risk-taking, he never went beyond that to really sound the alarm for the men he worked for. And in fact, if you want to expand the gang here, Ben Bernanke also is a servant to the financial services industry, banks in particular, so it doesn't surprise me that their behavior is to the benefit of the banking system at the expense of the American taxpayer.
Or the perceived benefit. Jerry Bowyer, I want to get to you, and then I want to move on to the market stuff. But you know, Jerry, there is a certain sense that Geithner is the fox guarding the hen house. And that is not what we want. I mean, this article from the Times, I think, comes at it from the left, okay? But still, guys like me, I'm highly skeptical. I don't know. You weigh in.
Yeah, well, that's a good point. The New York Times article was an attack from the left. And there are, of course, have been attacks from the right. And there are attacks from the late-night comedians. There's attacks from everybody. He has no friends out there. This is 360-degree ideological rejection. Nobody respects Tim Geithner. And it's impossible to do the job of Treasury Secretary if nobody respects you except the President and whoever it is whose fate you hold in their hands.
I want to see what the reactions are from official Washington. I mean, this is the New York Times, the paper of record.
Right.
So what if it's going bankrupt? Joe B., let me come back to you. Swine flu and stocks. Give me a quick take, please.
Well, this will be a passing tempest here as far as the economy is concerned. I feel very badly for the unrest that it causes and deaths that come from it. But I think we're mobilizing very quickly to deal with what might come of it. I don't see it as being a big problem for the economy.
All right, Jerry Bowyer, then let us move on to the potential for a 10,000 Dow because of Federal Reserve stimulus and lower energy price tax cuts and mortgage rates. Will we see anytime soon real recovery statistics? We've seen the bottoming, okay? Yeah. And Larry Summers, who was very dour and pessimistic on, what was it, Fox News yesterday, he said the economy is still declining. Right. Do you anticipate, Jerry, anytime soon that we will really see clear recovery positives?
I do, and I think Larry Summers wasn't speaking his mind. I think he was managing expectations with that interview, and that's sort of how he's going to handle this. Yeah, I do think we'll see recovery. It's not going to be a boom. It's not going to be, you know, a rocket ship, but I do think we see recovery. I think that, look, we've gone over these again and again, but it bears repeating that fundamentally we have low interest rates, we have reflation, we have a falling cost of land, we have falling cost of raw materials, and we have companies that are much leaner because of layoffs. So all of those cost inputs are being reduced. Now, we have had some contraction in final demand in retail sales, but not much, in the matter of fractions of a % year over year. So that adds up to me to the mathematical necessity of an improved profit picture.
Joe Battipaglia, putting aside the first quarter, we're going to get a reading, what, day after tomorrow? We can debate that, but that's yesterday. I believe, my hypothesis, Joe, is for the market to rally another 25% or whatever, we have to see real clarity in the economic statistics on sales and housing, production, and business investment. Do you see it, Joe?
Well, what you're going to have is a clarity that we're going to be down 10, 20, or 30% from our capacity, depending upon the industry that you look at. No pickup by the consumer whatsoever because their financial balance sheets are decimated. Unemployment will continue to rise. And let's face it, incomes just aren't growing that well. Add to this the nonsense and shenanigans coming out of Washington, where the confidence is failing as far as what's happening with the banking system, what's happening to the auto system. The very thing you talked about in the several first segments, Larry, suggests to me that this economy at best is flatlined for the next several quarters. You've contracted by several $1 trillion, and you will have deflation, not inflation, and it will be very difficult to gain any traction.
Jerry,
so if you get even a shallow recovery of 1% or so, you're going to have a jobless and profitless recovery where we are changing the dynamic so dramatically that the same industries that were very profitable before will not be now. That includes financial services, oil and gas, and health care, just to name three.
Jerry, you get a response to this.
Well, I wish I could argue with Joey B. about the political drift and provide excitement for everyone in America watching at home, but he's right. The political drift is all in the wrong direction, and that is a depressing impact on stocks. On the other hand, I think the American people are learning. The investor class is registering its disagreement. The New York Times article today is important because it shows that the left is sort of fragmenting. They're turning on one another. I think that a lot of the policy agenda of the left is going to get stymied.
Well, what about the prospects for consumer?
What
about consumer recovery and housing recovery? I mean, the cyclical components of the stock market have led the way, as the financials
Larry,
and banks have been the super lead. Let me just get Jerry.
Yes, my name's Jerry. I'll answer the questions to Jerry.
And then I'll come back to Joe. Go ahead, fellas. Last minute.
If you're looking at the fundamental economics, those look good. If you look at the fundamental politics, that looks negative, but the negative is out further in the future and not as definite because there's a real political fight in this country. So I'm looking through my bifocals. What's in front of me looks pretty good. What's down the road, not so good.
Joe, you get the last word.
I don't see those. Where are those fundamentals? Unemployment is moving to 10.5% or worse. Incomes are not growing at all.
Stocks can rally ahead of that. Stocks rally ahead of that.
The stocks can go back and test those lows like they did.
Interest rates are low. Raw materials are low.
Even your friend Dougie Cass recognizes that he is up against the wall with this because profits will not be there in the second half. And when that reality sets in, stocks test the low again.
Yield curve pointing upward. Those are the fundamentals.
The yield curve is being manipulated by the Federal Reserve.
And Joe
who's in it with
Thank you, gentlemen. Coming up more of the Kudlow Report. I'll be on the call tomorrow.